traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We have Rich Anderson on the line today. Rich, how are you doing, my friend?
Hey, I'm doing great. You know, I'm in pickleball paradise on the ocean, so can't beat that right now. Plus, compared to how cold it is in Minnesota, I mean, it's awesome.
Do you show everybody your pickleball championship ring when they go out for cocktails and stuff?
Yeah. No, I'm like Michelangelo. I'm still a beginner. That's what he said when he was still learning when he was 87.
This is going to be a real stupid question, Rich, but what the heck is pickleball? I don't even know what it is.
Well, it's a ball with 26 to 36 holes in it, and you have a paddle rather than a strings like in a tennis, racket has strings, and this is a paddle, and it's only 20 feet wide and 44 feet long. The court is, so it's meant for guys as they get older, and as you and I both know, we're getting older.
Oh, that's the old wiffle ball. We used to have those when I was a kid. I remember the balls, the little plastic balls with the hole in them. Yeah, I remember that. Well, that's good. Hey, listen, you sent us a chart here, the weather map here, the United States, and it looks green and gold everywhere. What's this mean, Rich, as far as precipitation?
Well, there were two maps there. The one shows the precip over the last, I don't have it in front of me, but probably a week. And the other one is the continuing drought map. The second one is the continuing drought map. If you could cut and paste that to your website, that's kind of an interesting chart. And it just shows that in our hard red winter wheat area, we even with the rains that we've gotten, and we did get some nice rains, we're still in drought conditions in a good deal of the Midwest. Now the La Nina is changing, so there's a chance that the weather conditions will turn better as we go into summer, but it's the ocean temperature warming up takes time. It's not like turning on the faucet, and so we're talking it might be June or July before that starts to have impact as far as the weather trends in this country. That's
Rich. Do you remember?
It's a weird story.
Yeah. You remember in 1985 you came out to visit us in Pismo Beach, and Lake Kachuma was almost empty. Do you remember that big lake right above Santa Barbara? Well, it was even worse the past few years. And do you know that it filled 1/3 of the whole lake in 16 hours just a couple of weeks ago? My daughter said 1/3 of the lake came back in just a matter of a few hours. I mean, unbelievable that they got 19 inches of rain, Rich, in a day and a half.
That's kind of unbelievable. But if you also remember, we started, now that's a long time ago, and so my memory's a little foggy, but I think we started out, we planted the crop pretty good, got it looking good, grew good, and then the rain turned off in the Midwest, and, we had problems with our corn production that year. It's my recollection.
Well, we haven't had a bad crop, and how long's it been since we've had a really poor crop, Rich? We've been feeding the world for a long time now without any really big interruption. Aren't we due for some type of a bad crop somewhere?
Yeah, I mean, a really disaster we haven't had in ages. I mean, it just seems like the weather cooperates. I mean, look at Europe having the warmest weather in 60 years. Yeah. Otherwise, their natural gas would have been a major problem. Which is a market, by the way, that, I don't, that's like riding a rocket ship, but I'm kind of watching that chart. I got to tell you, I'm watching that in crude oil, but I'm liking the natural gas because it's, 70% lower than it was in August.
Yeah, it sure was.
So, when the technicals look favorable, I'm going to stick my toe in the water.
Yeah, I don't blame you. That sounds pretty good. Rich, how does it seem for the South American crop now? Because are they doing pretty good this year?
Well, you
for
got
beans?
2 stories. You got the Brazil's going to have record crops of both corn and beans. Now that Brazil's harvesting their beans right now, and their bean harvest is both behind schedule, and they plant saffron corn after their beans, and so their corn's going in late, which could make it subject to heat later in the year, and that always creates an iffy situation. Argentina it just stinks. The USDA last week lowered the Argentine crop, but we're still 3 or 4 million metric tons above what the Argentine government says their crop is. And so the big crop reports, the one last week is a non-event, year in, year out. The big one's in March. We're going to lower the Argentine crop again. Don't think we'll raise Brazil anymore. That Brazil's probably already peaked out. And then the U.S., it's going to be interesting. The real interesting bear thing between now and then is the USDA Outlook Forum in the late February. I think it's the last week of Thursday and Friday of February. Every year in, year out, that's always the biggest number of what we're going to plant. And they're going to I believe they will wave a magic wand and create an extra 3.4 million acres is what the current thinking is, looking at baselines of how they do things, which, of course, you can't wave a magic wand and create more acres. But it'll be a market factor for a moment. And then, as I've said, year in and year out, when that farmer starts putting that money in the ground, when he plants that seed in the ground, that's when the market starts to really pay attention to weather in the U.S., and that's generally when you start to see some lift by the middle, by the Ides of March, by the middle of March. So
how about
kind of what I'm expecting.
How about fertilizer prices, Rich? How are they looking this year? They tripled last year. How are they looking this year?
Well, they've come down some. They're still high, but they've come down a bunch. Although a lot of the fertilizer is bought by the farmers in the fall, and so the drop in prices, they wouldn't have. The guys that bought it in the fall wouldn't have taken advantage of that. But it's a function also of natural gas. If you keep in mind, for the last year in Europe, they weren't allowing natural gas for anything but heat and electricity, and so they were producing no fertilizer from the natural gas over there and for nitrogen.
Wow,
but that's
really
changed. Good. And right now you've got all the oil meal chart that you asked and that I got to you. It took a second, but I got them to you. And the monthly one goes back 72 years, so you can get a big picture perspective that we're extended. Now, part of that has to do with the Malaysian oil stocks are 600,000 more than a year ago. The price of diesel fuel is down, and diesel fuel and the renewable fuels is a Biden green energy project, and that is what's driven the price of soybeans up to where they're at. And Russia's cutting their production by 500,000 barrels a day. Well, they're doing that probably because the markets are soft, but that's eventually going to find a bottom in here, and it'll go back up, and that'll help.
Hey, listen, thanks for joining us, Rich. We'll have you on again in a couple of weeks. Enjoy your holiday, and we'll be watching you on ESPN for the Pickleball Championships.
All right,
I love you, buddy.
Bye-bye.
Take it easy. Tell Lisa I said hello, pal. See you later. Rich Anderson, folks. We'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is what we call a 382 day in the wheat. If you'll notice here, I posted a chart of wheat going back several months, and you'll notice we had several corrections. Remember, the high on this was at 1370 back in June, and we dropped in half, 50% correction, believe it or not. Everybody thought it was going to go to $20 with the war in Ukraine and for what was going on in the Crimea. But you can see here what we hit today was a 382 retracement of the high we made, several months ago. And it's backed off a little bit, not 8 or 9 cents from there, but so far it has stopped and held it. But there's one that's going on right now that I think is real interesting, and we were talking to Rich Anderson about it just a little while ago, and that is the soybean meal. Now, this happens to be a little 4-minute chart, but the pattern is what's interesting, and I wanted to bring it up here to show you. We had a position on in that, and we were stopped out on the high. What we did was we took our position right here. It backed off a little bit, and then we went up and stopped us out for a small loss, but that's neither here nor there. But anyway, we were watching a lot of 382s happening today, and several of them were in other markets that we follow quite a bit that are also, very, very interesting. But I wanted to take just a moment here to talk to you about the timing of the market. If you remember, I did this book with John Jameson a few years ago, and it's a theory of everything that I work on, ABCDs and statistics and everything like that. I just want to post you a chart here for one of the things that we ran the statistics on. This happened to be the euro. And basically what it's showing you is that the high probability of the euro either topping, or either low of the day or the high of the day, one of the two, whatever it happens to be, on a high percentage of the time. And we're talking around 70 to 75% of the time. If you do the work on that, you'll be able to see that that's what it's done. How do we find this out? Well, we had a MIPS computer, which means millions of integers per second. And all you do is you just start throwing numbers at it of where the prices are at certain times of the day, and it'll give you a rough, better than a rough idea, because it is artificial intelligence. It gives you an idea of where the market's going to be at any particular time. And we know they call these things magic time on the floor of the Chicago Mercantile Exchange, because that was the opening price or the first 45 minutes of the day, whatever it happened to be when the order flow came in. We don't have a pits anymore to be able to see the runners coming in. All you have is these little flashing things on your trading platform to see them go up and down. But that's really, what you're looking at. But if you went back and did the work like what we did, you'll know that you come in with certain times of the day when you have a really high probability of the market making an either a high or a low for the day. And today happened to be one of those days. And we remember we said this long before. Fact is, it was in the middle of the night when we sent this out in the video, showing you that one thing you want to be prepared for is to look for a 382 retracement here in the E-mini S&P, which came in exactly at 4,000. And the high was 4,075. And it backed off 30 handles from there. Now it's back. It's coming back again. Now, if we get back above this, that tells us that there is a possibility, because remember all those ABCDs that we talked about this week that we were talking about, they culminated right here, folks. And there again, there's that one standard deviation right down here at 40.60. There's one standard deviation for the week. And what happened? Boom, it stopped. Where was that? 120 handles from the high. And that's where all these numbers come from. They're basically numbers that come right out of mathematics. And what they do is they give you what the not the blockchains, but the option chains, what they are and how they work these darn things. And that's why it's so very, very important to pay attention to it. And that's what we try to do, is to get time and price together and line it up. And that's the main thing to really, really look at. I posted the chart again of the NASDAQ, and I tell you, that NASDAQ banking index, that is the most important chart that you're going to see, folks. Let me see. This is January, February. This is February, March, April, May, June, July, August, September, October, November. It's the most important chart you're going to see on the year. And if it isn't, it's time for the old cowboy to get his trusty Burr Walter and start moving out into the old sunset, because that's going to be pretty tough. Talking about banking index, let's take a look here at Mr. TB over there in Las Vegas, the Valley of the Sun. I want to show you a chart that should scare you if you happen to be long a banking stock. It's been pretty good for 13 days, but you can see here, this is the chart for Goldman Sachs. We made a 78% retracement, folks, within 1 point. It went 1 point above the 78% level here on Friday and immediately reversed. And you can see with this big wide-ranging reversal bar after 13 bars up, very, very powerful. You can see the same type of thing happened before when we came down. However, what we have to realize is that if these markets turn, and they can, we know that for a fact, if they do turn, they have a tendency to go a long, long way. Now, whether they're going to do that or not, I don't know. There's been one particular chart that has been in the news on Bloomberg, particularly, and it comes from the Federal Reserve. And what it's basically showing is something totally different than what's happening in the world. What they're doing here is they're showing the money supply. Look at the supply of money, folks. The money supply has been collapsing to the downside. Now, how can that be when there's inflation out there? Well, who knows? Okay. Well, there we go. Someone from Greg in Boston, the home of Larry Bird and the Boston Celtics. Let's take a look at what that means. He asked what the 1-3-5 pattern means. And by golly, we have a chart on that, because you know why? It did the same thing today, folks, that it's done every day this week. and that's when I was doing the thing for the money show, and it did it 3 days in a row. It did it Wednesday, Thursday, and it did it again today. And I'm going to get this thing up here so that we can see it. I hope I kept it. I know I did. Oh, I think I know it, and then I don't know it. But anyway, basically what it means, Greg, is that if you have 3 lower highs, okay, that's a 1-3-5 pattern. The time between 1, 3, and 5 should be equal, very, very close in time, okay? And they also should be a ratio of either 618 or 78%. That's what they should be. And they are that almost all of the time. It happened again today. And what I'm going to do here, when the break comes up, I'm going to bring that chart up so you folks can take a look at it and see that it did the exact thing every day, Wednesday, Thursday, and Friday. Wednesday was the day that I was doing it for the money show. Did it again on Thursday, and it did it again on Friday. By the way, I did get some really positive responses. Finally, it was 2 days late, but some folks that saw it really enjoyed it. So I was happy that occurred. But I do want to show that pattern to you again when we come back here from the break. So we're going to take a little break here in about 30 seconds. And during this time, we're going to be taking a look at this pattern that we just had a little while ago, and we'll show you what we mean. Maybe Greg is listening. He'll be able to see it. So we'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, for Greg, I posted the chart in the Tiger Den showing this a 4-minute chart of the S&P. It basically shows the 1-3-5 pattern where you have lower tops. That is a downtrend. And you can see the last rally was at a 382, and from there it went down and made new lows, and then of course it's come back quite strong. But the same thing occurred here in the Treasury, the market for the, hold on one second here, for the soybean meal market that we were looking at. I want to bring this up here because you're going to be able to see the same pattern, only upside down. This is how you determine what the trend is. When you have higher bottoms, okay, you're in an uptrend. You can see higher bottoms in an uptrend. There's 1, 3, 5. It's also known as a 3 drive to a top pattern, but that's it. If you're in an uptrend, you have higher bottoms and higher tops. That's basically what it is. It doesn't make any difference what the time frame is that you're looking at. If you look at this on an hourly chart, it's still in an uptrend. If you look at it on a monthly chart, it's still in an uptrend because it's near all-time highs. But if you're going to determine what the trend is, the first thing you have to do is you have to determine what is the time frame that you're dealing with, when you're looking at these things. Folks, when we deal with the ABCD pattern, which is, I've never found anything any better than that, and it's pretty good. I mean, we see that for what it's worth, and it's worth quite a bit, in my opinion. But we know that it doesn't work all the time, but when it does work, it works with like magic, and that's what you're looking for. Those the ones that you're looking to trade are the ones that give you the best possible ABCD patterns. This past week or so, if you remember in early February, the one that gave us the best of all worlds was the euro. We'll get this up here. You'll see that it had that giant move here. We dropped 3,500 points, 3.5 points, folks, which is $3,500 in euro. We covered it right here at the 61% retracement. We tried to sell it on the 382 rally. It missed that rally by a heartbeat, and now it's trading below the 61% retracement. Just like bonds are collapsing to the downside, we warned people in the video last night that bonds looked very, very ominous. It looked like they were going to break some more today, and that is in fact, what they're doing. I do want to show this euro because it just missed it. You talk about heartbreak. We missed the top in the gold market by $2, and now what we're looking at is, you'll see here, yesterday we were trying to sell the euro at the 382 ABCD pattern right here, and it missed us by 10 pips, or roughly $100. And then, of course, now it's broken down into new low ground. That doesn't mean that much because, by golly, all we're trying to do is to put the odds in our favor. Folks, we had some major stuff happen yesterday in these markets. I mean, you have to. We were here talking to you about them, and they're so important to me that I hope I'm wrong. I really do. But this is the big daddy rabbit right here. This is the one we got from Jim Bartolioni. Put this on your wall, folks, because if this one fails to the upside, we are going a long way up to the upside. And if it doesn't fail, and this is bearish, boy, we're looking at trouble in River City. So that's what you're looking at here. You have a perfect ABCD at a 382. There can't be anything more bearish than that. That is the AB leg equal to the CD leg in both price and time, and it's coming in exactly at the 382. Can't ask for anything more ominous than that. So it's very, very important to remember that. Now remember all these other stocks that we've been looking at: Apple, Tesla, Amazon, Disney, and where was the other one we had? Google. I mean, all of them have had tremendous breaks from where? 382 retracements. Just look at Google, folks. Well, now we'll do one at a time because they're taking turns right now. And let's get this one here. This happens to be Google. Yesterday, Google was in the box, okay? They were hammering it really bad. Today, they have a new player in town, the one that had been really the strongest for such a very long time, which was Tesla. And where are you, Tesla? I know I've got you here somewhere. Nope, I think I've put Tesla on vacation. Yeah, Tesla went all the way up, folks, to that 211, 210 was the 382 retracement of the whole move down, folks. And it's still up more than 50%, on the year. So that's the main thing to pay attention to as you're looking at this. So anyway, that's what we're paying attention to right now. By the way, if you were looking at that pattern in the soybean meal, and you happen to sell that up there, it's already trading down about $3 from the high, and that's only a short-term pattern, so you can't really do much with a 4-minute chart, but it shows you the pattern. That's really it is, and that's what these fractals have done over the years. Is it's showing you that fractal analysis takes you from the very beginning, the microscope, all the way out into the giant telescope that looks over the whole universe. So that's what you have to look at. You have to look at the very first parts of it, and that's it. Now, hold on. I've got to turn the beeper off because it's going crazy, which is crazy on a good thing, but let's just move it down here just a second. I want to show you something, folks, directly related to what we've been talking about, and that are these harmonic numbers that we talk about in the Floor Trader's Handbook. Let me get this up here, and you'll see when we talk about these numbers, because these are the same numbers. Just like we looked at time. When we did that MIPS computer, we ran it on time. When is the time of the market turning? Boom. And then what we did was we said, give us the average prices or the most normal prices that you find in a market. And this happens to be the harmonic number for the S&P on a shorter term basis. Okay, now, right now, if you go back to and this has not changed, folks, honest to God, it has not. 1982, we started trading the S&P. There was nobody in the pit, April the 16th, 1982. But a year later, 1983, everybody was in there because that was the bottom of the market and it was on its way up. Market bottomed on August the 9th of 1982, and in 83 it was going crazy. The average swing has never changed, folks. The average swing on the S&P, if you did a tick chart, is 5.5 points. That's the first harmonic number. The second harmonic number is 3.5. That's if you looked at it on a minute-by-minute basis. Now, because the market at that time was trading at 103, that was a big number, 5 points. Okay, but now we've got it trading at what? 4,000? Hello, operator. 40 times higher? Give me a break. And that's why you got to multiply it by 10 or 20. And those are the numbers. You multiply 10 times 5, that's 50 points. Half of that is 25. So the harmonic number usually is between 25 and 50 points in the S&P. You multiply it by what the standard deviation was for this week, subtract it from the high. Guess what your low is, boys and girls? 40.64. Hello, operator. Does that mean anything? Oh, wow. This was the low of the day. Anyway, that's what we're looking at. They're just numbers, and all you try to do is add the numbers and the time together to give you a spot to say, yeah, this looks like it's okay, and then you try to get a shot at it, and we'll see whether that, means a whole lot or not. But that's really what you're trying to do when you're lining these things up to find out, what these things are trying to do. But they repeat so often that it was really neat for me today was when the money show people called me today to give me some numbers, in which they were much better than I thought, and they said, actually one of our executives wanted to go in and watch your trading, and they actually they didn't have to, but they purchased it, which was nice. And we had a nice day trading, which was fun, but that's neither here nor there. Hey, we're going to get back and we're going to talk some more about some of these markets that are really important. So stay with us.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is a chart of Tesla. This is in the news all the time, so you really need to pay attention to this. Look at the multiple ABCDs telling us that it was going to bottom right around that 209 level, the low 206. It doubles in price from January to February in 5 weeks. And it's still, down more than 50% on the year. But look at the high yesterday, folks. Exactly 382, okay, and also 50%. And look at the high. Look at the lows back here. You see how that becomes resistance, and that's what it's done. But look at the harmonic numbers, folks. Look at this. Look at your harmonic number here. This whole move right here is equal to the whole move right here. Now, you don't have to follow Mr. Tesla around, Mr. Musk, to find out what he's doing. Just look what the stock is doing, for heaven's sakes. I mean, I get too excited about this because when I see it, it really makes me exciting because I watch it every day, and that's what keeps me, doing this stuff every day. And I'm not right all the time, but I'm right some of the time, and that's the main thing that what you're trying to do is when you're looking at some of these things is to try to be right more than you're wrong. And if you can be right 50% of the time, make more money than you lose, you're going to do just fine. And that's what your goal is, to try to do that. You don't want to try to be into perfection. You don't need to do that. You just need to find some type of an edge. And then that's pretty it. By the way, this is the worst day for Tesla since January. Well, that's where it was bottoming, folks. That's not a big thing to talk about. But you can find these numbers yourself if you just pick up a chart and mark them off and go back and look and watch the market repeat over and over again. You don't have to know a lot about Fibonacci and sacred geometry and stuff. You can do it just by eyeballing. It's really quite simple. Take a look here, folks, a market that has been making this pattern for quite some time. Now, this is Bitcoin. I know some people don't believe in it. I don't know anything about it, so I'm the last person to talk about blockchains or that kind of stuff. Never traded it, don't own it, don't want it, don't need it. So here's what we're looking at here. This is just a chart from one of our friends across the pond over there in Denmark. This is the chart. You can see the big ABCD here. You see that? Hey, look at the ABCDs all the way down. A, B, C, D, A, B, C, D. Look at this. There's your 382, folks. You see that picture right there? That is the NASDAQ banking index right there. You got an AB leg that's equal to the CD leg, and it's coming in where, boy? Johnny, put the placard down. Everybody can see that it's 0.382. So that's what you're looking at is when you're knocking on the door. And believe me, folks, it's not just knocking on the door. It's using it with a giant, giant, giant sledgehammer, because be careful. This thing could really be very ominous. And we've got Jim from Palm Harbor, Florida, about TLT. Jim, how are you, my friend?
I'm doing good. When we're done with this conversation, I wanted to go over bonds and the TLT. We've had this counter trend bounce that started in January. I bailed out of my TBT. Boy, I'm itching to get back. But what I wanted to talk about was I took some big hits on the E-minis. A 10, 12-point swing is nothing, but at $50 a point, it can add up. So I've switched over to the mini E-mini, which is the symbol is /MES. And the difference, that's only $5 a point instead of $50. So you can buy, you can buy 4 contracts, and that's only $20 a point. So you get that 10-point swing, and it goes against you. That's only a $200 hit to your account, rather than the $50 a point for the full mini contract. So if anybody's just trying out or want to work, 2 contracts is $10 a point. You're not going to get hurt. You could trade the patterns. You can hit your fibs, and it's a way for someone to get into a futures account without really risking a lot.
And not only that, it's got huge volume and great execution, too. So it is a great way for people to learn how to trade the S&P. When I started trading the S&P, it was $500 a point. That went on until, I think, 96 or 95, somewhere in that ballpark. And then they reversed it to make it, 10 for 1. But regarding the TLT, Jim, we're looking at a major bear market in bonds. They started 2 years ago. 3 years ago now, 2020. And, that's when everybody was telling us about, negative interest rates. We're going to be looking at not just 6% on interest rates, but probably closer to 7 or 8% here in the next few years. So if you're going to trade the bonds, trade them with the patterns. If you see a buy pattern, buy it. If you see a sell pattern, sell it. But long term, we've made a major turn in interest rates here. Look where we've gone, Jim. We've gone from 0.5% to what, 4 and almost 5, and mortgage rates have gone from 2 3/4 to 7 or 8. I mean, hello, operator. I mean, they're banging the drum there.
Well, it's kind of interesting. I flipped a couple of Corvettes in the last 12 months now, and I was getting from the credit union 2 1/4, 6 years for a 6-year car loan. It was free money. The second one was at 4 3/4, and this last one, right in December before the Fed raised again, was a car loan, 6 years, 5.5% with prime credit. So now, if people are talking 7 or 8% with record high car prices, people are going to be turning in their cars. And I know one person that's already done that because they couldn't afford the car payment and the car insurance. They just took the car off the road.
The average car payment,
and those car payments are going up. They're going to continue to go up if the rates keep going up.
I heard the average car payment, I heard this week on Bloomberg, was $985.
Amazing.
That was 4 times my original mortgage when I was in California, for heaven's sake. I mean, I think people have lost control of this, but it's all going to work out. I hope, at least I think it will anyway, but it's going to be interesting how it all works out, that's for sure.
Well, hey, listen, I've entered a little small position in TBT, and I'm going to actually increase that this afternoon if we get a bounce off these bonds.
Well, just make sure you always use a stop in there, because those markets can be very vicious, as we know. And if you don't use a stop, you're saying you know more than the market does, and you don't, Jim. Nobody does.
No, I've been if I'm wrong and I've got 4 contracts and it's only $20, I can take that 6-point hit to 120 and then just go on to the next trade.
I agree with you there.
Have a great weekend, Larry. Thanks for everything.
Hey, thank you so much for calling in, my friend. We certainly appreciate it. That's great. That's really great to hear from you again. Jim from Palm Harbor, and we got someone from Springfield, Missouri. Bill, are you there? Bill from Springfield, Missouri. I have I bought a submachine gun, Thompson submachine gun in Springfield, Missouri at a gun show in 1962 when I was a senior in college. I paid $250 for it, and that was an absolute fortune in 1962. And I held that gun for 30 years. I sold it for $7,000. Now it's worth $50. Bill, what can I do for you?
Larry, I've listened to you for 20 years. What is the NASDAQ banking index symbol? I have tried to Google it.
I'm going to, you're going to have to figure that out. But let me pull it up. This is what I got from Jim Bartolioni, and that index is KBW. KBW. That's the symbol.
TD Ameritrade will not let you bring it up.
Find another platform, but that's it. KBW. Thanks, buddy. I appreciate it.
That don't help me. Okay.
Now, listen. Hey, Bill, I'll get this for you for Monday's show. Okay, I'll have it for you, so not to worry. All right.
Thank you.
I'll call Jim tonight. He'll give it for me. Okay, we'll be right back.
On TD Ameritrade.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the long-term chart here of the Treasury notes, and that's the one that gives you the car loans and mortgages and personal loans and all that other stuff, credit cards. But you can see here, we've been in a heck of a bear market for 2.5 years now. The top up there is when they were feeding us the tapioca about negative interest rates and how we had to get used to that. Hello, operator. I never could understand how anybody could be that naive. But anyway, now this is a different ballgame now. we're in a major bear market. You can see we have a potential here for an ABCD pattern, and if we do get that, I think you have to take advantage of it and lock in some long-term rates if you can, no matter what you're looking at, because interest rates are going to go higher. We're going to go back to where we were, folks. I don't know if we're going to get back to 12 or 13% like we were back in the T-bill days of 1977 through 1980. But heck, we live in interesting times, and it could actually do that. So we got to be at least stay flexible. That's really what you want to be doing as you're watching these things here unfold here today. Now, next week we're going to have Norm Winsky is going to be our guest. Unfortunately, folks, Norm has always given us the winner of the Super Bowl, and he's been right about 90% of the time. And I don't know who the winner of the Super Bowl will be, but it'll be the team that scores the most points. I'll watch part of the game. I will not bet on it, but it'll be exciting probably. And again, maybe it's not. My heart is with the Eagles because my 3 grandsons, Sarah's grandkids, are Eagles fans in Philadelphia. And I was a big Eagle fan when I was in Terre Haute, Indiana, back when they didn't have too many football teams in the NFL, but there's a lot of them now. Anyway, let's get ready for next week. It's going to be fun. It's going to be exciting. And we're going to pay real close attention to that banking index, folks. That's the Big Daddy Rabbit. Live every day in an attitude of gratitude, and may God bless.